Qualcomm Stock, ticker symbol QCOM. This stock is up 9% on the year-to-date chart, while the overall market, in this case the S&P 500, is up roughly 8%, so that's pretty similar. Qualcomm beat on EPS by a small margin, but missed on revenue in the latest quarterly results. For the upcoming results presented on the 3rd of May, almost all analysts expect a miss. From a dividend point of view, things look pretty interesting with dividend yield at 2.7% and 19 years of dividend increases. But does this mean that Qualcomm stock is a buy at current prices? Well, in this video I'm going to show you real quickly what Qualcomm does. The most recent earnings report, the fundamental analysis, dividends, returns versus the S&P 500, comparison versus some major competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Qualcomm do? Qualcomm creates semiconductors, software and services related to wireless technology. In the most recent earnings report we see that Qualcomm reported $9.5 billion in revenue, with a GAAP EPS of $1.98 and a non-GAAP EPS of $2.37. But don't be fooled, revenue is down 12% year over year and net income is down 34% year over year, so that's something that worries me a bit. Qualcomm has two main segments, QCT and QTL. QCT is by far the biggest segment with $7.9 billion in revenue, an EBT margin of 28%, which is significantly lower than the other segments. QTL represents $1.5 billion in revenue, but EBT margin of 73%. In total, Qualcomm returned $2.1 billion to stockholders, of which $1.3 billion in share repurchases and $0.8 billion in dividends. If we zoom in on the biggest segment, we see that handsets is by far the biggest sub-segment, representing $5.8 billion. Automotive represents $456 million, and Internet of Things represents $1.7 billion. The interesting thing is that handsets is down 18% year over year, so that's their biggest sub-segment, which concerns me a bit. However, automotive is up 58%, but it has to be said that this is the smallest sub-segment. Internet of Things is up 7% year over year. For the second quarter of 2023, Qualcomm expects to deliver $8.7 to $9.5 billion in revenue and a non-GAAP EPS of $2.05 to $2.25. QCT revenue is expected to be in the range of $7.4 to $8 billion, with an EBT margin of 25 to 27%, which is lower than the previous quarter of 28%. It's the same story with QTL, expected to deliver $1.25 to $1.45 in revenue and EBT margin of 66 to 17%. According to their investor presentations, the recent results were impacted by broader macroeconomic environment and elevated channel inventory. To be honest, I think they will miss expectations on the next earnings because of the market which still hasn't recovered properly. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. Qualcomm is a $132 billion market cap company. PE ratio is at 12, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for Qualcomm, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at $43.6 billion, and in this graph we see that revenue went up quite a lot in 2021 and 2022. Between 2013 and 2020, revenue was kind of flat. So the question is if Qualcomm can sustain this growth in the coming years. Over a longer period of time, margins are always between 20 and 30%. Since 2018, margins are increasing, but most recently they took a hit. This is also shown in the investor presentation earlier in this video. EPS is going up quite a lot since 2017, which is also something that I really like. But it's again the same question as with the revenue. Can Qualcomm sustain this growth? Price to sales ratio is at 3 right now. Over a longer period of time it is going up and down a bit. The current number does not look good to me, but for a tech company it's not that bad. Price to book ratio is pretty much the same story. And price to free cash flow does look good to me. It's around the 16 mark, indicating that it's undervalued. Analysts have mixed feelings about the upcoming years for Qualcomm. In 2023, EPS is expected to decrease quite a bit. In 2024, it's expected to increase quite a lot, again with 21%. And after things cool down, they expect that EPS will increase at mid-single digits. And it's pretty much the same story with the revenue expectations. After a few ups and downs, they expect mid-single digit growth. Return on assets is sitting at 11.5%, which is above my 10% minimum. Return on equity looks also really good. And the most important number, return on invested capital, is sitting at 13.9%, which is a really good number. But the thing that I don't like here is the fact that it's lower than the 5-year average. Nevertheless, 30% is still an insane good number. Current ratio is at 2, which looks pretty decent to me. For this type of company, I prefer a number below 2. Total debt is sitting at 16.8 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now, total cash is sitting at almost 8.2 billion, so they can pay down a big chunk of their total debt, which is something that I really like. Nevertheless, it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and a lot of things. And in here we see that free cash flow is going up and down quite a bit. It's not really steady and consistent, so that's something that I don't like. Another thing that I love about this company are the shares outstanding. It's going down in the long run. It means when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.7%, which is a decent number. Annual payout is at $3.2 and payout ratio is at 25%. I prefer 50% or lower. So right now they have roughly 75% left in cash to buy back shares, pay down debt, acquisitions, research and development and a lot of things. The 5-year growth rate is at almost 6%, which is a decent number. On top of that, they grew the dividends for 19 years in a row, which is also pretty impressive. Overall, a great looking dividend scorecard. But how about the historical returns? I decided to compare Qualcomm stock with the overall market, in this case the S&P 500. Next to that I added Intel, Texas Instruments and Analog Devices. On the 5-year chart we see that Qualcomm had the highest return including dividends of 162%, beating the S&P 500 big time. Intel returned minus 32%, which is also very interesting. And both TXN and Analog Devices beat the S&P 500 big time. On the 1-year chart it looks pretty different. Qualcomm returned minus 11% while the S&P 500 returned minus 4%. Intel had the lowest return with minus 33%, and Analog Devices had the highest return with almost 20%. On the 6-month chart it's again Analog Devices having the highest returns and Qualcomm returned 3% and was the only stock underperformed the S&P 500. On the 1-month chart it's Intel that had the highest return with 6% and the S&P 500 returned 3%. All other stocks had a negative return. So bottom line, Qualcomm has beaten the S&P 500 big time in the long run, but most recently it was underperforming the S&P 500. And how about some fundamentals compared to the other companies in this list? We see that these 4 companies are quite different in market cap, enterprise value and employees. Qualcomm has the lowest PE ratio, but others also have a low PE ratio. Price to sales is looking very interesting with both Qualcomm and Intel having the lowest number here. Price to free cash flow is again the lowest at Qualcomm and Intel. Revenue growth year over year is not looking good for all companies. Analog devices has the highest number here, but Qualcomm is also doing quite good with 19%. The 5-year growth rate is also the highest at analog devices and Qualcomm. The net income compound annual growth rate is also the highest at analog devices and Qualcomm. Last but not least is the free cash flow compound annual growth rate. Analog devices is again the winner here. Texas Instruments has the highest gross profit margin and also the highest net income margin, but the highest free cash flow margin is at analog devices. Return on equity, return on assets and return on total capital is the highest at Qualcomm, which is very nice. All companies have more than enough cash to pay down a big chunk of their total debt, which is also very nice. The last thing that I want to check are the dividends. Qualcomm and Texas Instruments have the highest dividend yield, and payout ratio is the lowest at Qualcomm, which is also very nice. The 5-year compound annual growth rate is the highest at TXM, and the most consecutive years of dividend increases is the highest at Qualcomm. Overall, I think Qualcomm did a better job in most parts versus the competitors. But is Qualcomm stock a buy at current numbers? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 1%, 3% and 5%. Since I think they will increase their revenue at the same numbers versus the historical averages. Next to that, it's also based on the analysis expectations and the current outlook. Profit margin I'm filling in 23%, 25% and 27%. And for the free cash flow margin I'm filling in 10, 12 and 14%. For the PE ratio and the price to free cash flow I'm filling in 11, 12 and 13. My desired annual return is 12.5% since I can get an easy 10% annual return with owning an ETF. Right now Qualcomm stock is at $116. I hit analyze and we only see one green number. And it has to be said that free cash flow has a big impact on these numbers. We have a low price target of $36 to $84, which is a big drop from the current stock price. We have a mid-price target of $52 to $109 and we have a high price target of $72 to $140. To me, the mid to high price target is the most justified here, and I'm focusing on the multiple earnings value and not so much on the free cash flow value, since I think this is a bit off recently. Based on this price target, we have a range of $109 to $140, showing that it's within the current stock price target, leaning to the lower side. So according to these numbers, Qualcomm could be undervalued. My final conclusion on the stock is that I really like the company, of course. I think it's a future-proof business with a lot of potential. But there are some things that concern me a bit. Free cash flow isn't really steady and consistent, and profit margin has taken a hit and it's expected to take another hit in the upcoming quarters. Revenue is also quite interesting. It's decreasing most recently, but in the long run it's up big time. On the other side, there are a lot of positive things as well. Dividends are great and PE ratio is also really low. From a value point of view, things look pretty good either. I'm slowly increasing my position in Qualcomm because of great dividends and decent valuations. Whenever the price goes down big time, I will probably buy more shares. For now, I'm really looking forward to the upcoming earnings and I expect big things happening. Either positive or negative. So let's see what happens. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.